I start with the returns. Returns, as you know, it is a very important chapter in the GST, and we have a separate chapter for returns in the intermediate course also. We will teach our students how to enter various returns in the GST common portal, and how the outward supplies, inward supplies are matching, like that. So all important forms will be filling by the students. So it will be on a interactive way for a GST intermediate course. Returns, that chapter is very important in the GST beginner course also, as well as for intermediate and regarding GST in tally course also. So what is the purposes of returns? It is an information to tax administration, because only when we are filing the return, the administration, tax administration body or state government or central government will get know what was the sales, what was the purchase, what was the tax liability, what is the input tax credit available, and what is the net tax to be payable by an taxable person. Okay, so it will be an information to tax authorities. And compliance verification program means the tax authorities will think prima facie that if a person has filed his return properly, then he will be a person who has complied with the law. That is a prima facie impression. Then finalization of the tax liabilities of the taxpayer within the stipulated period means if we are filing a monthly return, we have to ascertain what was the output tax liability, and it is deducted by the input tax credit, and we are arriving at net tax liability. So we are finalizing the tax liability. Then providing necessary inputs for taking policy decision. Policy decision means based on the returns submitted, there will be a data or information available to central government as well as state governments, and they can take various decisions, and the same can be included in the budget, means based on the returns or such data accumulated, various decisions can be taken by the state governments or central government regarding their expenditures or income, like that. Then management of audit and anti-evasion programs means the tax authorities can implement audits, inspection, search, such activities based on the returns filed by a taxable person. So all these are the purposes of filing the returns. Then who needs to file the return? The return should be filed by every person who crosses the threshold limit, that is we already have discussed, 20 lakhs for rest of India and 10 lakhs for northeastern states as well as Uttarakhand and Jammu and Kashmir. So those persons has to file return who has crossed the threshold limits. And there are some other class of persons who need to be registered and therefore will have to file the return, like means mandatory taxable persons, and they have to file their returns even though they didn't cross the threshold limits, because the threshold limits are not applicable for them. Like interstate suppliers, TDS deductors, e-commerce operator. TDS deductors is applicable to government companies or government undertakings, like that. E-commerce operators, you may be knowing Flipkart, Amazon and all. Then suppliers supplying goods through e-commerce operator. If any person, if any business person is supplying through Flipkart or Amazon, like that, they have to compulsorily register as well as they have to compulsorily file their return. What is the outward supply return? That is called GSTR 1, important form in the GST Act. So GSTR1 is for filing the outward supply details. A normal registered taxpayer has to file the outward supply details in GSTR1 in relation to various types of supplies made in a month. So it is a monthly return and it should include all sales transactions. And what it should include? Outward supplies to registered persons, that is businesses. Outward supplies to unregistered persons including consumers, those who are not registered as per the GST Act. Details of credit or debit notes, zero rated, exempted and non-GST supplies, exports and advance received in relation to future supply. All these details should be filed in the GSTR1 form. There is a separate rules and separate form for these returns as well as other provisions like the other sections like registration, refund, payment, invoice. So when we are filing GSTR1, the rules should be followed as per the GST Act, as well as the form is there, GSTR1 form, a prescribed form, that should be followed, and more importantly, it is filed in the GST common portal by online, because in GST scenario everything is through online. And what are the invoice details that should be? Details required. Prescribed fields of information from invoices need to be uploaded. Which details should be uploaded? One important thing is no scanned copy of invoices is to be uploaded. No scanning, nothing. Then for B2B supplies, all invoices, whether intrastate or interstate supplies, will have to be uploaded. What is a B2B supplies? Business to business. Means both are registered under the GST Act. Yeah, tax invoices. What is the purpose? Because unless we are not filing the invoice, the other person cannot claim input tax credit. Suppose we are sellers and we have not filed the invoice on form. The purchasers, the purchasing businesses, taxable persons cannot claim input tax credit. So it is very compulsory that all invoices, whether intrastate or interstate supplies, in the case of B2B, it is important. B2B, there will be two types of transaction: B2B supplies and B2C transactions. B2B means business to business and B2C means business to customer. Okay, so in the case of B2B supplies, all invoice details should be uploaded. Input tax credit can be claimed by the recipients only upon GSTR1 and matching of details. And what about B2C supplies? Uploading in general may not be required as the buyer will not be taking ITC. Why? Because the customers may not have been registered as per the GST Act, so they cannot take input tax credit. When I talked with a guy from Australia, he told me that in Australia, even the customers can claim input tax credit. They will get refund from government for taxes paid. That is a wonderful system. Maybe in India also it will come. So in the present scenario, input tax credit cannot be claimed by the customer. So uploading all invoices issued to the customer is not required. And to implement the destination based principle. What is a destination based principle? Because it is an important point in the GST scenario. Yeah, the important point regarding destination based principle is that the state where the consumer is located will be getting the advantage of tax collected. But the important point is that the state where the customer is located will be getting the tax. Okay, tax revenue, the share of that revenue collected. So if a person is in Tamil Nadu and the customer is in Kerala, the revenue will come to Kerala only, not in the, for the Tamil Nadu. But as of now, in the present scenario, the Tamil Nadu government will be getting the income. So that is why all producing states like Tamil Nadu, Maharashtra, Gujarat and all, Gujarat, Madhya Pradesh, Uttar Pradesh and all, where almost those are the main producing states in India. So they were having a lot of problems in implementing GST. That is why government brought Compensation Act also. The customer is in Kerala, tax will go to the Kerala government only. If he is traveling from Kerala to Tamil Nadu and it was consumed after crossing the boundary of Kerala and entering the train entering in the Tamil Nadu state, it doesn't matter. The tax is already gone on while purchasing. Okay. So in that case, invoice of value more than 2.5 lakhs in interstate supplies will have to be uploaded. So it is very important. In the case of interstate, in the case of B2B transactions, all invoices should be uploaded. But in the case of B2C supplies, invoice of value more than 2.5 lakhs in the interstate supplies should be uploaded. And there is a state-wise summary. Interstate invoices below rupees 2.5 lakhs should be uploaded as a state-wise summary, and all intrastate invoices, that is within the state, can be uploaded as a state-wise summary. Hope the point is clear to you. Then description for each item. How we have to input the invoices. What code should be used? There is a HSN code, Harmonized System of Nomenclature, where each goods is specified with a unique code on a universal level. Okay, so it will be same across countries. So that code should be used, and there is an accounting code in respect of supply of services. So there is a service accounting code, SAC, that should be used for services, and the minimum number of digits that the filter will have to upload will depend upon his turnover in the last year. Okay, so the important point is HSN code for goods and accounting code for services. HSN code is used for supply of goods, mentioning goods, and service accounting code is used for supply of services. Then transaction value. There can be two values for a transaction. One is transaction value and another is taxable value. Okay, so if there is no consideration, taxable value will have to be uploaded for some transactions that are mentioned in the schedule 1. There should be taxable value in the invoice. Okay, so these are the main points in that PPT. We have covered returns. What are the purposes of return? It is an information to tax authorities, it is a compliance verification program, and it is a finalization of the tax liability for the taxpayer for a period, and it is also useful for government to take various policy decisions and to take anti-evasion programs. If a person has withdrawn some goods from his business, as per the GST Act, it should be taken as supply. But normally, a person would not have been paid any amount to the business. In such a scenario, such taxable and transaction values will appear. Because there is no transaction value, there is no amount paid by the owner to the business, but there is a taxable value that will be calculated using the normal values. And there is also some transactions can be there, like services provided to employees, like that. So these are the purposes of return, and who needs to file return? Who has crossed the threshold limits regarding normal taxable persons, and for mandatory persons. Sorry. So for mandatory persons, those who have to compulsory register as per the GST Act, they have to file it mandatorily. Okay. Then GSTR 1 is a form where we upload outward supply details. Then various invoice details are required for B2B supplies. All invoices should be uploaded, means details should be uploaded for claiming input tax credit by the tax persons. Then for B2C supplies, invoice of value more than 2.5 lakhs in interstate supplies should be uploaded, and there is a state-wise summary for the other transactions. Then description for each item is given as HSN code for goods and service accounting code for services, and transaction value and taxable value that may happen as per the specified transactions as in the mentioned in the GST Act. That is regarding the first PPT on return. We will cover one more PPT in the return. Actually, there are 5 PPTs. We will cover one more and we'll stop with that. Okay, because that is also important. GSTR 2. So we have already seen what is GSTR 1. GSTR 1 is for filing outward supplier details. And what is GSTR 2 return? GSTR 2 return is for supplies received by a taxable person. Means inward supplies. GSTR 1 is for sales. GSTR 2 is for purchases. Okay. So, input goods and services received by the taxable person from various suppliers will be mentioned in the GSTR 2. Then, he can claim input tax credit on supplies received from various suppliers based on GSTR 2 return. So, the important thing is the GSTR 2, actually 2A. Okay. There are 2 returns, one is 2A and another is 2. This 2 GSTR 2A is auto populated because suppose we have 3 suppliers. Okay, supplier A, supplier B and supplier C. These persons have filed their GSTR 1. I have seen how to file the GSTR 1. So, they have filed their GSTR 1. What will happen? This information will come to GSTR 2 of the taxable person, the purchaser. So it will be auto populated. There is no requirement for filling return 2. So suppliers will file GSTR 1 and details from GSTR 1 will be auto populated in GSTR 2 of the taxable person as inward supplies. There is no requirement for inputting all our purchase invoices. And GSTR 2 return will show all details of input goods and services received, who was the supplier, what was the value, and how much input tax credit is available. Okay, so the beauty of the GST system is while the supplier files the GSTR 1 form, it will be auto populated in the GSTR 2 return of the purchaser. Okay, so the purchaser, the recipient, will get know how much input tax credit is available to him, whether the supplier has shown all invoices with their correct values, everything they will get know. Then matching of supplies. The important thing is GSTR 2 should match with the supplies received. That is, GSTR 2 should match with the GSTR 1 because GSTR 1 is filed by the supplier and it is auto populated as GSTR 2 in the dashboard of the in the dashboard of the recipient. So the invoices mentioned by the supplier should be equal to the invoices mentioned in the GSTR 2 of the recipient. That is, sales should match with the purchases. Sales GSTR 1 and purchase is for GSTR 2 return. Both return 1 and return 2 should match. And input tax credit will be available to the purchaser only on successful matching. Suppose I will tell one example. What if purchaser has purchased from unregistered dealer? Okay, I will complete this portion. Suppose Mr. Ravi is in West Bengal and he is selling to Mr. Kishore in Delhi. Ravi in West Bengal to Kishore in Delhi. While Ravi files GSTR 1, all invoices issued to Kishore in Delhi should be filed, should be uploaded. Then Kishore in Delhi can see all these invoices in his return too. And if there are 10 invoices issued by Ravi to Kishore, all 10 invoices should be uploaded by the Ravi. Okay. And suppose if Ravi has filed only 9 invoices, what will happen? When Kishore in Delhi, the purchaser, checks the invoices, he can identify, he can realize that out of 10 invoices, only 9 invoices is filed. So what will happen? Kishore will lose input tax credit claim on the 10th invoice. So what he will tell? He will tell Mr. Ravi that the invoice is missing. And there is an option for Kishore, the purchaser, to input the missing invoice in the GSTR2 return. Only the missing invoices to be uploaded in the GSTR2 return by Kishore or the supplier. Okay. And if invoices in GSTR2 does not match with the invoice, it will be intimated to both parties. And if that mismatch continues even after intimation to both parties, ITC will be reversed. Then, action to be done by recipient. What Kishore in Delhi should do? If details are not inputted by the taxable person, no further action is required. If the supplier has not provided the details, the recipient can himself furnish the invoices not uploaded by his supplier. That is what I told while checking the GSTR2 return. If any invoice is missing, the purchaser, the Kishore in Delhi, can input the missing invoices. And credit on such invoices will also be given provisionally but will be subject to matching. So both buyer and seller, both sides should be matching. If there is 10 invoices, it should be 10 invoices here also. Then responsibility of the supplier. The taxable person can inform the supplier regarding the absence of details in GSTR2 return. Suppose the 10th invoice is missing, the purchaser will inform. Then supplier can upload the invoice and pay duty and interest on such missing invoices in his GSTR3 before September of the next financial year. Now a clear mechanism is there, GSTR1, 2A, 1A like that. So we will explain, I will explain that in the next webinar. Recipient will then automatically get the ITC on that invoice. So the important point is the sales return should match with the purchase return. All invoices should be there. And the purchaser will get input tax credit only when there is a matching between the sales and purchase invoices. Otherwise, the purchaser will not get input tax credit. Then, what is the recovery action against the supplier? If supplier did not furnish the invoice or not pay taxes, will lead to proceedings against the supplier and recovery action will be taken. Then, I have already told some missing invoices should be uploaded by the purchaser, and other than that, some details only persons can recipient can fill, like imports, purchases from non-registered dealers or unregistered dealers. Sorry, only means some more details should be inputted by the recipient or purchaser, that is imports, purchases from unregistered dealers or purchases from composition dealers, exempt non-GST or nil GST supplies, etc. So these details should be filed by the purchaser. Okay, this will not be available in as per the GSTR1. So hope all points are clear to you. We will review it. GSTR2 return. GSTR2 return will show all supplies received, input goods or services received, and based on that he can claim input tax credit. And it is a auto populated. 2A form and 2 GSTR 2 and 2A form, 1A form is there. There is a clear mechanism. Then matching of supplies only when GSTR 1 match with the GSTR 2, the purchaser will get input tax credit. So it is the responsibility of the purchaser that all invoices are appearing automatically and correctly, so that there is no problem for him. And one other important point is, as per the GST Act, there is a compliance rating from 0 to 10 score. That is an important thing, please note down. There is a compliance rating as per the GST Act, like our CIBIL score. So, when you are buying from a new supplier, you always should check the CIBIL score or the GST compliance score. Not the CIBIL score, I put that as an example. Compliance rating score in the GST system. Suppose there are two suppliers. For a supplier, it is 10 score for GST compliance, and for another person, it is 6 only. You should prefer the person who has 10 score, because he has filed all his returns properly, he has paid the taxes properly, so that there is not be any fear for claiming input tax credit by dealing with him. Okay, so that is an important point. Then action to be done by the recipient, he has to inform the person, the supplier. Responsibility of the supplier, he has to upload the missing invoice and has to pay duty or interest like that. Then there is a recovery action against the supplier if some invoices are missed or not paid taxes. Then the purchaser has to file, first has to input additional details such as imports, purchase from non-registered dealers, purchase from composition dealers, exempt non-GST or nil GST supplies, etc. That has to be inputted by the purchaser, buyer itself in the GSTR 2 form. After today's webinar, we will cover rest of the PPTs. There are 3 PPTs. We are concluding here. Thank you.